All right, no intro, no anything, because the previous one didn't work well. I think it should be fine now. Boys and girls, you should be able to hear me on this one. No volume. Wait. Just give me a second. I said I'm working on it. All right? More cowbell. Oh, yeah. Hell yeah. All right, more cowbell. Looks like in the time being while I was talking and when I was explaining everything, well, why is this ain't working now? Is that gonna be like the next thing that we're gonna have an issue with? Right. So I was actually saying how it's going to probably pick up, and you probably did see the drawing on the screen. Hello, hello, hi, howdy. I was actually saying hello to everybody earlier. Walter, Leo, Miami Ram. Okay, also yeah, I was just kind of jumping into this. So Casey, Black Mamba, Gene, of course, Sky. Hello, everybody. Those who I didn't say hello to and are there in the background, of course, Aqua. Hi. Hello, everybody. Thank you all for showing up. Let's get into this. I'm sorry so late, and we were, with all the issues, and I was talking, and then thank God I actually paid attention to you guys saying in the chat no sound. Yeah, now resolved. So we're probably mostly gonna talk about whatever is left from this session, which is about 36 minutes. So I don't think we're gonna get anything substantial that we haven't seen today throughout the day. We already dropped quite significantly. Um, to be frank, most of us have expected this, but not with that level of severity. Of course, the retaliation on Trump's tariffs brought this about, but we kind of spoke about the technical side, implying that before it ever happened, it is even more severe than I expected. There are sides to things that look the same way we're not biased, right? With the same way we say nothing burger, not a nothing burger. It's not a nothing burger. It's just that it appears to be a lot within the context of the days before, but if I'm correct, and we will be going for a corrective movement, and then another drop, and then we're going to look back, we're going to realize today and the last several days were just the beginning of that very wide, high volatility sideways movement, which is normal. Again, we just expected it slightly higher. What we ended up doing is breaking even lower, so I'm not going to be surprised, and I'll show you in a second. We kind of spoke about this. We spoke about this on the previous sessions um, before, and what was meant to be a resistance level, which of course did do its part significantly well, as you can see right there, showed evidence of the market respecting that level, acknowledging it, but then that huge gap, that market overreaction, of course. And I could be wrong. The market will, may as well continue being bearish, but I'll show you what it is that I see, and I have to be objective. First of all, I mean, 30 minutes is normally where we start looking at, and here we already are starting to see a bit of a recovery going on. In fact, we are already above the 20 range, so we're moving towards the 50. Arguably, potentially towards the end of this session, we'll actually see 50. And if this will continue correcting this way, and so it's not going to be all that far-fetched to those who understand how things play out. It's not going to be all that weird if we're going to eventually identify some form of head and shoulders here, and having the price action correct back to 5400 or maybe even higher where the current range is. I'm not going to be surprised if at first we will retest 5270. Being highly magnetized, will start moving into the gap that was opened up today, and start closing it. And once we close it, roughly find resistance at around, what is that's 54.24, 54.24. Pardon me, I have overlapping levels there. But yeah. So yeah, as I said, 54.24, that may be kind of the range. We will have also here the diagonal resistance of the channel, and so it's not all that far-fetched if we will be able to see BTC muster up. I don't know about BTC anyway. So this definitely could be the scenario. Let's see. So far we're just seeing it on the 30 minutes. The thing here is, those who are objective, You can see that's the very same phenomena on the 45 minutes, not yet on the 1 hour. Probably will start picking up towards next week this way. I mean, at this stage, it's probably inevitable, right? I mean, we do acknowledge that these processes take some time, and we do acknowledge that we might have another convergence, divergence later down the line, somewhere around here, somewhere just basically as we continue with these sessions with next week. But even with that, so part of it may be part of what we're seeing on the hourly, may be that force that will start correcting us back up towards into the channels. You can see we completely broken out of the channel right here. Here is the channel. This is where it's passing, and we're completely below it, right? So not good news, if you will. And so there is a logical assessment that will at least be moving towards the shorter term channel, right? Don't forget 45 minutes bullish, 1 hour not yet bullish, but will become. 4 hours more so moving towards convergence, divergence, at least temporary, to give the market some temporary relief. And so, even remember, again, it stems from the very same logical way that the market does like balance. And so, if it gives in one direction a lot, there will be a rebalancing process. At times it's more slow, at times it's faster, under the conditions and the, I guess, fear and all the sentiment and everything, and the technical elements that are at play. And people were, again, like myself, were warning and saying this will happen one way or another, regardless of what Trump will say, the Fed will say, will do. None of it matters, right? And so now we're actually having it happen. Of course, we're using the current reasons as to why we're having the current price action. In reality, the same way we don't ignore gaps when we're going up, and we take them very seriously. And I can tell you that, in my humble opinion, at least one of those may be closed based upon the momentum that we're seeing. The problem is that we still have more bearish momentum as it appears on the daily. And so don't necessarily expect next week, don't expect Monday to start and be bullish right away. In fact, we may slip just a little bit further before actually opening the market. We are seeing that we've been in oversold conditions on the weekly for some time now, so at least some temporary relief, even though this represents a basically a whole separate wave of its own. And we kind of were talking about the 5,000, 5,100 being a very strong level to which the market will be testing to. So actually, it's not all that surprising. We ended up just doing it slightly faster than expected. But on that same note, I'll remind you that we recognize that the potential of having some form of a head and shoulders in here. And so it's not going to be all that surprising. Again, justifying a bit of a corrective movement towards 54 at least. It doesn't have to match the previous shoulder. But given that that's the major support or resistance level that we were at prior to the current levels that we're at right now, given that the only level that we have that the market probably will care about very seriously is 52.12 or 51.92. There's kind of a range of roughly about $20 ish, if you will, around there. And these $20 actually matter quite a bit. You can see them right there. They're marked as the golden pocket. Oh, pardon me. And so it's not going to be all that surprising if we'll end up residing on that very same level. Of course, if you are attentive, you notice that today's levels, right, match very neatly with the levels we got on the 5th of August, 2024. So it's not all that surprising. Now we're just on the right end of things and slipping over, and it still is very indicative that we are just at the beginning of a far larger downwards wave. We inevitably, as now we've probably, in my assessment, at least completed or will be completing the first leg of the process. And so I would assume so, based upon the normal market behavior. Pardon me, my apologies, I'll shut this up. Based upon my experience, based upon the market observations, the technical tools that we're seeing, I'm not going to be surprised if this will end up being the first point, if you will, within the larger channel. and we will be moving back up from here, retesting 54, and then continuing this downwards channel, whichever it's going to look like. If you ask me, it's actually not as wide as you see. This is more of a slippage behavior. Well, now let's remove some trash from the screen before it gets too messy. Well, I probably should have kept this Head and Shoulders for you guys to remember. But right now, you want to focus on the fact of the matter that we're seeing some bullish momentum, and you should be prepared for it. Once completed, which does not seem to be a lot at all, we will continue with the market as it was behaving. We kind of predicted all of this looking at the price action last months. And coincidentally, by the way, if you can look at this larger sort of structure interpretation of the same structure, you can identify how the very same levels were actually very strong retest levels, and we ended up being stuck in this range. And so it's not going to be all that surprising if we end up retesting the very same range. Although, of course, not exactly as we did before, not exactly the same amount of time. It may, end up taking a lot longer. But overall, if you look at this, it's just kind of between that 52 range that I've mentioned and 5,000. Not all that great, because that means we can be pulled even lower. Beforehand, of course, we still do expect the bullish momentum we saw on the smaller time frames. So, step by step. First, let's start next week. See some of that bullish momentum print on the price action. Once it does, then we'll probably see the fatigue of the bullish momentum, and then subsequently we'll expect the bearish momentum to take over again, and then the market to drop, and eventually leading to this back and forth, very, very volatile, very tight range that is, pardon me, very similar to the range we had on 2024 around February, March, and April, May, April, and March, right? So we kind of penetrated the very same levels right here around February. So arguably we can say 4 months. 4 months that we ended up testing very similar levels. That is it. I mean, I know the market today was very volatile and you're expecting something explosive, but I'm sorry to say, it's just that the market was moving very rapidly in a very severe fashion downwards. You all saw that. I don't need to be kept in hindsight. But then again, I was warning and telling everybody, months in advance, this is coming, showing the evidence, the signs, talking about it again and again, what I'm doing. SQQQ, for example, which is today just having an absolute blast. Yes, we're correcting a little bit downwards. That's normal. In fact, I'm not going to be surprised at this rate that we've moved upwards if we're going to end up retesting 45.25. Of course, we have plenty to go. For me, every time I see a lower price on SQQQ, all it is more of another low price at which I can buy if I have some spare change to do so, right? The more the merrier. Just make sure your averages are kept good, right? Don't try to make sure you're not breaking your averages too far, right? Influenced by tariffs. BTC is a load of bullshit and doesn't. Of course, it's not. It's affected by whatever they find convenient to make you think that it truly is affected by. APP puts all on going to have a relaxed weekend. I see, Mamba. Okay. Is it working now? Yes, it should be. Yeah, it is. It is. Trump broke the stream as well. Trump is breaking everything. No, just international commerce. Yep. Greg keeps talking about Head and Shoulders. It's only fair to say the market took a haircut. Absolutely, the market took more than a haircut. The market took a scalping, if anything. The market is now missing a bit of its own scalp, if you will, all of it. Head and Shoulders being a shampoo, yeah, of course. This merely a flesh wound. Robert, are you sure this is just a flesh wound? To me, that seems more like the market lost its head today. Of course, by next several sessions, we will see the market correcting up, and the bullish people will be saying, ah, there it is, to the moon and stuff. But just like the thumbnail says, to the moon you go downwards. So movie reference. I don't know, Robert. I'm horrible with movies. Come on, everyone knows that. And the market ate some bad hummus. The market definitely broke. Look, we cannot be biased like this. The gaps are very strong. Although right now we're not seeing enough evidence to say, oh, a certain correction upwards, this and that. But within the context, within the framework of the behavior of the price action, which we ourselves say on the other side of things, when the market is bullish like this, irrational, we say again, the market lacks balance. In other words, if this persists for too long, we expect a higher corrective movement that, even though if not justified, still just for the sake of keeping the balance of the market. So just based upon these sort of facets of the market and my own reading into how the momentum is penning to be. Again, it's not visible in most time frames right now, especially those who are looking, because the larger ones just look bearish very badly, right? The shorter one look somewhat bullish, but there's basically a huge discrepancy between the forces. And so what I'm telling you, that the most sort of accurate way to see this is found somewhere in the middle, meaning based upon this very low drawdown, we will be correcting upwards, in my humble opinion, around 54, locking us in this wide channel that will be taking us sideways, although with great volatility, right? Basically, it's not going to be tame. It's going to be severe highs and severe downs. So all the way maybe from 54 to 51-ish, maybe slipping to actual 5,000, something handle, right? That, in my humble opinion, based how the market is sort of stabilizing, not too high, not too fast, not too slow, it's kind of coming to I wouldn't call a halt, but a slowdown. And that slowdown, although still represented on some other time frames, we still see all that volatility. So it kind of has to work hand in hand together. And so what we're saying, basically, on one hand, we will be staying in almost this again, very emotional market that is very reactive, left and right, up and down. Well, not left and right, but up and down, very severe, with a high margin of deviation. But then again, when we're going to look at it backwards, after we're going to finish potentially several weeks of this back and forth, we're going to realize that we ended up retesting the very same supports and resistances, which I've just named, around 54.24.16 right there, or just 54 flat. Of course, we have the 53 flat, again, very strong psychological level, and 52 strong psychological level. But basically what I'm saying here, based on this very severe drop, we might be seeing some corrective movements that are as severe, and although it will look volatile, it will still keep us within the same range. Again, not a very tight, very wide range, but still a range nonetheless. Okay. Headless Horseman, yeah, pretty much. The overvaluation of everything, absolutely. Yeah, that's true. Peter very well said. Peter very well said. That's why we saw everything is being so negative in the last several sessions, and when we were looking at pretty much most assets, we were able to see literally over the hill, right over the horizon, how the market is going to, bring it lower, right, rather than bring it higher, even though there was still hints of bullish momentum. That's why originally, when we looked at, if you remember, just what was it, just a couple of weeks ago, when we were talking about 5,900, 57, 58, and I said, look, on the one hand, the market is signaling that potentially that it is the direction to which it wants to arrive, and retest and all that wonderful stuff. And at that same note, I said it's probably very unlikely because if you're more familiar with the market and you're able to see the subtle signs, you'll be able to see that the market is very unlikely to reach 59, and in fact probably break down before ever reaching 58, and exactly what we got, right? And we retained around 57. That's that weakness that at times is really hard to predict. So, for example, right now I'm saying, oh, we're gonna have some bullish momentum next week. Until then, we're gonna pile up so much negative momentum that all that bullish momentum that we saw will be merely a temporary correction on the daily chart and will dissipate within maybe 2 days altogether, and we'll continue down the very same path we were on prior. And so, yeah, that could happen. Absolutely, but I highly doubt it. It's going to be very abnormal. Again, we are not biased. The market likes to find balance. When it's moving upwards, when it's appreciating in price. The same thing happens when it's depreciating in price. The market finds balance, stops, and it is merely a representation of how we trade. Remember, the technical analysis, the charting is merely a visual representation of our actions that stem from our sentiment. It is all very, very simple. Those who want to know more, of course, are more than invited and probably will watch this later if at all. There's plenty of people who prefer to watch all sorts of mass media channels and learn nothing. Those who want to become part of the smart money, learn how it is that we were able to predict these moves months in advance and how we were able to prepare for them, via purchasing a boatload of S triple Qs and DCAing into them. And, although some of the process was very, very painful and very difficult to go through because it was not going as expected, we still ended up with the result that we wanted to, even though it took slightly longer, because remember the whole idea, we don't time the market. We identify the context within which the supports, resistances, the whys, all of that wonderful stuff, why everything happens, why use the momentum the way you do, how use it, what is the cycle, how does the cycle look like, where does it start, where does it end, why, all the whys that lead you up to be able to on your own read the market and not to be dependent on Greg, right? I mean, because Greg is still a human, may drop dead tomorrow, God forbid. Let's hope not. That's not the case, but still, the plan is for you to be able to not be dependent on me either. And sometimes I get things wrong. Maybe sometimes you'll identify through learning how it's done right that Greg's got something wrong, which happens, And imagine what an awesome brag that is, saying, oh, I noticed something Greg missed, right? But for that, you need to tackle the topic. You cannot have, great days that, great legs that will lead you to win a competition, right? If you don't ever attend leg day. So again, technical analysis is like leg day. Not my quote, actually. That quote was coined by Tom Nash. He was the one to give me this. It's a brilliant quote, and I absolutely agree. Technical analysis is definitely like leg day because it's hard. No one wants to do this. Most people ignore it altogether. But that is the secret sauce to have an all around workout. In that same way, when compared to the market, that what leads you to have an all around skill set that truly allows you to understand where the market is moving within the short, long, medium range, doesn't matter. Plenty of our members are investors, hardcore investors, people who do not buy and sell every day, not every month, not every several months, doesn't matter. Still, though, they understand the importance of the cycles, how they work, what needs to be known. And so, yeah, there's that. That's it. This is for the people who watch later. Definitely join the Discord, join the Patreon. I don't think there's much to say from here on out. You know what? Let's just bring the main screen back. But there's not much to say. It makes sense. I keep on repeating and saying these things that we're not biased. And when the market does have this almost standard like behavior, right? And when we see excessive behavior in one direction or another, what is more likely to happen is some form of rebalancing. And even though the most of the time frames are showing very negatively, my argument here that we are at least coming to some corrective movement right here, potentially, like we said, to around 54. I really struggle to see the market, at least at the time being, moving any higher to maybe 56, complete both gaps. I really struggle seeing that. I really do. In fact, like I said, I can easily see more how the market will continue moving downwards rather than um, actually completing both of these gaps. But definitely, I am able to see how with the accumulating bullish momentum, and with next week, of course, printing slightly different than this week is closing, sort of kind of, leaning into this, we are very likely to see that 5400 in my humble opinion. And in fact, like I said, we'll probably see it many times before continuing on downwards. That's going to make total sense, and from all facets and tools of the market. That is it. I don't think I have anything else to update. The rest of the market will be dropping with the indices, as you can imagine. We're not going to go over individual assets. They all look like crap and will look like crap. And of course, maybe we'll have some tapering, as the market corrects a little bit. But overall, as you can imagine, it will all look like crap. By the way, those who wonder about the support resistance levels, I mean, of course, you can follow the previous videos, and actually just look back. And if you ever heard me speak about the levels at the according area within which we are currently residing, as you can imagine, I basically called out these support and resistance levels before many times, just like this 95.41 on Nvidia. And if you have any doubts about it, here it is, clear as daylight, right? Even a blind cucumber under the sea can see it, that the market is very well aware and respects this support or resistance level depending on the direction through which we're passing, but still very much acknowledging it. And we spoke about this many times. We definitely tested the up where the levels we had upwards from the 100 level. The only one we kind of skipped was the 100. We tested all the way to the 110. We did not get to test the 100 this time around, but those who know, we've tested it about literally, tens of times prior to. And so it's redundant, although of course it's hard to find for me right now. I'm not gonna find one all the way until I'm gonna run out of candlesticks, of course. Here it is, yeah. Well, but those who want to do an experiment on a larger time frame, you can literally see that how many times the market do acknowledge the 1 hour, the 100. Sorry, the 100. In fact, here it is. You can identify it right here around 2024, around August. Very much highly respected. That's it. You're right. Was an entire month after all. That's it. I think this is kind of everything I wanted to say. The market will be dropping. Worth of SQQQ. A shrubbery worth of SQQQ. I would not be against if you want to grant me one. I mean, I have myself like 1,000 of them, but I wouldn't mind having like 10. Greg, should we sell our SQQQ? You should do. No, don't ask me that question, Gene. You should do whatever the hell you want. I'm gonna be holding my SQQQ for quite a long time and getting more. So, no. No, it's a good question. I mean, I understand you're probably, making fun and all that, but it is a legitimately good question. People are panicking. People are now already sitting on very decent profit and thinking, oh my God, we ran so fast. Maybe I should, unload some. I don't understand how far it will go and all these facets. So, no, absolutely. That's a completely legitimate, good question. It's just that, again, to each their own. Every person should do whatever they think is right. I will just personally tell you that I will be waiting, and in fact, probably loading up on next week, on Monday, on Tuesday, on Wednesday, whenever we're going to have the opportunity. That I'm probably going to be reseeing that 45 level, maybe even that 42 level. I mean, I know it looks so far away, and you're like probably thinking to yourself, I mean, no, it means nothing. And the fact that we slipped and stress tested this, if the market will be behaving severely enough to the upside, of course, we may see a corrective movement all the way to 42, which is unpleasant. That's an entirety of $8, although I would not rely on it. As we're making higher lows, higher highs, I would assume that the most reliable area would be that 45.25, probably 45 flat, and so consider a little bit of slippage below that, maybe a little bit more than normally people expect. But you get the idea. It's a little bit of slippage and overall corrective movement. All right, looks like everybody's dropping off anyways. I'll bid you all a fair, wonderful weekend. I wanted to do a little bit more of an in depth video this time around and a little bit longer, but I mean, there's not much to ramble on about. As you get the idea, it's pretty simple here. And sadly, I did have a little bit of technical issues and a lot of stuff to get to. Plug to the moon! I'm already having 2,000. I'm just waiting, Walter, patiently. Maybe I'll buy a little bit more next week. I'm not in a rush anywhere. You know that. Coda, good to see you. Hey, I mean, we do have a very nice gang of people end up coming here together every time, every day. I really appreciate you. The new members, the old members, all of you, Damien, Coda, Gene, Walter, Peter, Black Mamba, Mircha, Casey, of course. I have no idea who you are. Keep up the great work, but I appreciate the comment. So thank you. Who else? Where else? Of course, Useless Facts, Goddamn Legend. Love you a lot, man. Just changed the nickname already. Danny, thank you all for showing up. Nannies, all of you guys and girls, I wish you a wonderful weekend. I hope it's going to be awesome. Prepare for a bit of a corrective upwards movement next week, in my humble opinion. It's I'm not always right, and so the market will be so in pain and so severe, the world will be overreacting, and we will be going down. Remember, this is not financial advice; it's just my, ramblings of a madman on the internet, right? So yeah, absolutely. You decide what's right for your portfolio. Remember, nobody will manage your money better than you will for yourself. Very unlikely at the end of the day, right? And so that's it, boys and girls. I'll see you in the community. I'll see you on the Discord. Those who are interested, definitely inquire about the One-on-One Academy. It's currently full, but within a couple of weeks, I will be having new open spots, as some students will be finishing. And make sure you have yours reserved, and otherwise you'll be missing out and waiting for months on end to get a spot. It is what it is. It's completely like tutoring. It's like one-on-one tutoring, like you would get a student for your for your son or daughter at any subject, like math, English, biology, whatever, right? It's one-on-one tutoring on the Discord, but there's plenty more perks and benefits to that, of course. I'll expand on that once you do ask me about it. We do a Q&A, we do a bit of a call, answer all your questions, and during which I'll tell you all the benefits that are included. Thank you, Peter. I mean, it's just my viewpoint. It may be wrong, it may be right. And that's why I like technicals, because then it's based upon actual real-time data and not speculation, not gut feelings. You know what we say here: if you have a gut feeling, take it to the bathroom. It may pass. Maybe it will pass. Yeah. So, yeah, we will not rely on gut feelings here. We just go with what the charts show us, what they give us, what the market is showing, what the sentiment is showing. We just kind of ride the waves that we are given. We choose some of them. We don't just ride.